What up, people? This is a nightly review, and I'm going to talk to you guys very briefly about, what took place here in the market today and what myself personally in the Focus Trades group is focusing on. So, very interesting day here, guys, on Wall Street, right? And what we're seeing here today is potential signs of a little bit of rotation taking place. So, as you guys know, one of the bigger setups we've been focusing on over the last handful of weeks here is the daily squeeze for the index. Now, we know, guys, when a daily squeeze fires to the upside, if it's truly going to fire, you can get 4, 5, 6+ days of momentum in that direction. So we will see if we get continuation tomorrow, but more so than the squeeze firing, here's what's interesting today, guys. Market's up 2% here this morning. The squeeze is firing. We're not seeing strength in the names that you might have expected to see strong. So if I told you this morning the market was going to be up 1.5%, 2% today, you probably would have thought that Amazon would be up strongly today, but it's rolling over, right? You probably would have thought something, hey, like a Facebook would be having a good day. Not so much, right? You would probably think something like, hey, Netflix, probably going to bounce back here. So the market's up 2% today, but our FANG stocks, right? These leading names, guys, that have led the Qs while the SPY has been consolidating all the way up here towards these all-time highs, what we're seeing is a little bit of rotation today, where it looks like money is starting to come out of some of those leading names. And where's it going, guys, right? Check out the financial sector. XLF is up almost 5.5% today. The energy sector, XLE, is up over 3%. The transportation sector, IYT, is up 5%. The industrial sector, XLI, is up 4.5%. Then we look at XLK, which is the ETF for the technology sector, and it's red for the day. So this is very simple, guys, right? What we are seeing is just kind of these early signs of rotation where, you got all your tech stocks over here, and this is where the big money's been playing, right? They're buying Amazon, they're pushing Amazon, Netflix, Apple, Google, Facebook, right? All of our favorite names up there to brand new highs. And now all of a sudden, guys, today it's looking like they're taking some of the chips out of those names, right? And they're buying some financials, right? They're taking some of the chips out of those tech names. They're buying some energy, right? They're taking profits in these leading tech names that have gone on crazy runs, and we're seeing that capital being rotated into other sectors today. So this is a really important observation, guys, because you don't want to fight, right? You want to go with the flow of the overall market. And if big money is not jumping into tech right now, you don't want to be looking to play those names to the upside. Now, here's the thing. I'm not suggesting that tech names are going to get destroyed. Rather, guys, what I think would be a bit more likely is just kind of a classic reversion to the mean. I mean, we can pull up the Qs here. So I'm not saying that tech's going to get destroyed, right, and we're going to get creamed. I just wouldn't be surprised, guys, to see your classic reversion to the mean as the ETF itself and a bunch of the names in that group revert back to that 21 period EMA, as we tend to do when we get a bit too far away from that mean. So you look at something like Amazon. I would not be surprised, guys, to see Amazon make a nice clean little flush down to that 21 EMA before potentially resuming that strength towards the upside, right? It wouldn't surprise me to see Apple come in a bit more and meet up with that 21 EMA. So when we see signs of rotation, we don't necessarily need to start, loading up on puts on tech names and going crazy. We're not necessarily looking for tech names here, guys, to get destroyed. It's just that we saw a potential picture starting today, and if that trend continues over the next few days, where tech is weak, financials, energy, and everything else is strong, that's what we can expect, is that classic, typical, healthy reversion to the mean, as some of our favorite leading names could go back to that 21 EMA. So that's my thought process right now, guys. We got the breakout today on the index. Could this potentially continue? We shall see. You got a lot of people looking for more upside right now, and oftentimes, guys, that can be a bit of a trap. So we shall see, but we can definitely take a look at the Qs today and say, all right, this is pretty interesting. And you get these big move for the market this morning, and the tech names aren't participating. So moving forward, guys, let me update you real quick on positions I have open, positions that I closed. As far as open positions, let's take a look at the ones that are working here. You guys can watch the video from earlier this afternoon. Going back, guys, to that discussion of reversion to the mean, I think Facebook was way too far gone. So I did a call credit spread, shortened to 247.5 calls, and you can see that we're rolling over nicely into the close. So sometimes, guys, you get lucky with the perfect entry, right? And I'm putting that credit spread on right around here this afternoon, and now she's rolling over. So on this Facebook call credit spread, we got max profit of about a little over $1,000, and a couple hours into this trade, we're already about 20% of max profit. So if we continue to see some selling in tech and in Facebook tomorrow, all of a sudden, guys, a couple of days into a trade that could last for a month, you're 40-50% on the way to your max profit. That's a sweet, sweet deal right there. So Facebook is looking good, guys. Going back to the discussion of what is strong today, it's these financial names, right? Follow the money. It's something we always say in the group. Follow the money. Got a daily squeeze here on the financial sector. If the momentum continues, guys, the sector itself could break out, leading to more strength in these financial names. Favorite setup in the group, and this is one we've talked about a couple of times over the last few weeks in focus trades, is Goldman Sachs. You're getting a big breakout here of this consolidation today, guys. Clearing through this level of resistance, clearing through this level of resistance. What I'm looking for here in the financials, and specifically here in Goldman Sachs, is continuation. Once you get kind of a squeeze breakout like this, guys, on a big above average volume day of buying, you're looking for continuation. So what I did on Goldman here was an at the money put credit spread, where I shorted this Friday's expiration 195s. I bought the 192.5s. Max profit on this one, guys, is only about $500. You can see we're kind of flat right now. This is obviously, because we're close to the current price, we would like to see Goldman continue. So we'll see if we get the continuation tomorrow in that given sector, guys. And then as far as other open positions, right, a bit of a pullback here today in gold. So my open profit is getting tossed around, but these swing trades, guys, in my opinion, are still in pretty good shape. I got two sets of put credit spreads that expire in a couple of weeks, 158 and 157. I would like to see gold get back above the 21 EMA tomorrow or over the next couple of days, but I do have time, guys, and I do have cushion, so I'm going to continue to hold on to gold, and I'm not stressing that one at the moment. Now, UNP here, right, along with the market, guys, and along with, all this sector is getting love, transport stocks made a big move up today, and so did UNP. So going against me a bit here today, but I'm not stressing it. I got a call spread that expires in about a month. I shorted the 175 calls. I've got time, I've got cushion, and, we are getting a bit too far away from that 21 EMA. So if the market slows down or we see some selling over the next few days, guys, I would not be surprised to see these transport stocks really become the kind of come back in. So though that is going against me today, I've got time, I've got cushion. We're going to continue to hold on to that bad boy. What did we close today? We took off our TLT put credit spread for a very small 15% or so loss, guys, on the spread itself. Shorted the 163 puts. Those puts expire Friday. We got off to a good start, so that's what gave us some profit cushion. We gave back most of that profit today. So I look at this, guys, as I've got other trades that are working really well right now. Let me cut a weak link. Could TLT rally? Of course it could. But I got an opportunity to get rid of a potentially weak link at about break even. We're going to scratch this thing. We're going to ditch it. We move on to the next one. We can come revisit tomorrow, next couple of days, a week from now. But that's how I like to manage my account, guys. When you got positions, right? You got players in the account that are playing well. You want to bench those weak links. So that's the scoop there, guys, on TLT. I did close my Tesla put credit spread today for very small 15-20% of max profit, guys. And this is kind of cool. Was looking for some strength here this week. A bit sloppy here today. Had I bought in calls, you're getting torn apart with premium decay. Because I shorted the puts, I'm actually collecting a little bit of premium over the past couple of days. So I booked that one there, guys. Call it a day on Tesla. And I like where I'm at on my positions right now. So major thing I'm focusing on tomorrow, guys, is whether or not the market has that continuation of strength, or do we fall right back into this consolidation range? If we do, we should expect more weakness in the tech names, and it's going to be very interesting to see if that rotational picture continues, where money is pumping into the financials, energies, everything else aside from tech, and we shall see, guys. And that's about it for me today, guys. So I'll keep you guys posted on how these trades go. If you haven't already subscribed, then I'll catch y'all in the next video.